everyone, you are watching Weekly Forex Outlook by Light Forex. In this video, we will discuss the most exciting trading opportunities of the upcoming days for different currencies. Let's have a look at the chart. The US dollar index is trading near 6-week high. American currency was bought as a safe haven as market players got worried once again about the trade tensions between the United States and China. In addition, traders and investors are concerned about global economic growth prospects. Last week, the US President Donald Trump said that he didn't plan to meet with Chinese President before a March 1st deadline to achieve a trade deal. And if there is no trade deal, then the United States promised to increase trade tariffs for Chinese goods, and this will certainly lead to higher levels of the USD and lower levels in the riskier currencies. Chinese markets reopened on Monday after 1 week holiday, and all in all, we see that the US dollar remains rather strong as traders see it as much more attractive than other currencies which have their own issues. As a result, there is potential for the USD to remain at the decent levels to find support and even to strengthen. Let's now go through the economic calendar for the upcoming days. To do that, we visit lightforex.com. Here we find a very good economic calendar with all important events. And on Monday, there will be a block of economic data from the United Kingdom. Britain will release GDP for the fourth quarter and industrial production, manufacturing production figures. Of course, these releases are important. The British pound is still under the negative impact of Brexit uncertainty. Nothing is decided yet, and the time to reach an agreement is running out. Last week, the Bank of England said that on the one hand, it doesn't want to raise rates now because of Brexit, but if the process of Brexit goes fine, they will increase interest rates. The British pound went down and then up on the release, but all in all, it is going to remain under pressure. On Thursday, by the way, the debate on Brexit restarts in British Parliament, so we will hear more news. In the meantime, economic data will also play some part because these releases are important and they will make movements in the British pound. We go further, and also you need to know that on Tuesday there will be the speeches of the Bank of England's Governor Mark Carney. He will once again talk about the economic outlook and global trade tensions. The US Central Bank head Jerome Powell will also speak on Tuesday, although his speech has other topics, but maybe he will say something about monetary policy as well. Early on Wednesday, there will be an interest rate decision and a press conference of the Reserve Bank of New Zealand. The central bank will also publish its inflation report, inflation expectations. So we will find out what is the view of New Zealand Central Bank. But all in all, the interest rate is expected to remain unchanged at 1.75%, while the central bank's outlook is going to be more dovish, probably. This should have a mildly negative impact on the New Zealand currency. Next, on Wednesday, there will be a release of British inflation figures, and the United States will also publish core CPI and CPI later during the US trading session on Wednesday. CPI stands for Consumer Price Index and is an important gauge of the US inflation. You can see that forecasts, well, are just the same as the previous reading. So any surprises will make a difference for the USD for sure. On Thursday, there will be a release of Japanese GDP growth for the fourth quarter. And although the data from Japan don't usually move the Japanese yen, this is a different matter because GDP growth is really important. And in the third quarter, Japanese economy contracted by 0.6%. However, no recession is expected, and this time Japan is projected to show the economic growth of 0.4%. Surely this will be important release for the Japanese yen. Chinese trade balance will be also released on Thursday, and we'll hear from the euro area. European GDP for the fourth quarter will be released. Some positive changes are here expected in the economic calendar. We'll see. However, remember that last week the European Commission sharply cut economic forecasts for the euro area for 2019 and 2020, and this was one of the reasons why the euro declined that much last week. So the picture for the euro remains rather bleak, and well, maybe the data surprises and provide some support, or it can turn out to be even worse and make the euro break the remaining support levels. The United States will publish retail sales and producer price index PPI on Thursday. It is important there will be a speech from the Reserve Bank of Australia governor late on Thursday. And Friday we'll start with China's inflation data, and also watch for the UK retail sales on Friday, as well as some economic figures from the United States, which include consumer expectations, consumer sentiment, and industrial production. So this is what you should await in the upcoming days. A lot of data releases from the United States, where the government shutdown is over, so there are these releases. However, Donald Trump and the Congress have to reach agreement until Friday, February 15th, on a budget deal in order to avoid another government shutdown. So this will be important, and we'll be watching this news. Trump may declare a national emergency to build the wall if the Congress doesn't give him the money for that. So the situation looks intense. In addition, during the week there will be a new round of trade talks between the United States and China, and this also will be in the news, and it will make a big impact on the market sentiment, and as a result on currencies like US dollar, Chinese yuan, Japanese yen, Australian, New Zealand dollars. So keep an eye open for that. And some data from Britain, Euro area, and the meeting of the New Zealand Central Bank. These are the main events of the upcoming days. It's time to have a look at the charts, the remaining charts we have, and to perform some technical analysis. Let's start with euro dollar. And here you can see that on the weekly chart, the currency pair has finally closed last week below the 200-week moving average in the area of 1.1332. However, we can't say that the pair closed very much far below this support line. So this evidence of the future decline is still inconclusive, and the euro may once again try to test higher levels. However, any recoveries of the euro will be surely limited by resistance in the area of 1.1450, 1.15. As the general trend for the euro is to the downside, the USD remains stronger than the euro, so any advance should be used for selling. If there is a break to the downside, then surely the euro will naturally target the previous low at 1.1210, and we need to break below the levels of 1.1510. This is the support line going through the lows of January and November, and 1.15, the psychological level as well. So decline below that level will open the way down. The main drivers will be the market's risk sentiment, data from the euro area, and a lot of data releases from the United States. GBP USD tested lower levels last week, confirming that here it made a top just above 1.3150 and below the weekly moving averages. The 50-week moving average is about to get below the 100-week moving average, by the way, which is a bearish signal, so that the British pound may go for levels at 1.2850 and 1.27 from levels around 1.32 down to the lower part of this range. On the daily chart, we can see that there was a top here. The pair went below the moving average of 200 and then find some support at 1.2850. However, a resistance now is provided by the psychological level of 1.30, and at 1.3015 we have 1.3020, we have the declining 200-day moving average, which will also provide a significant resistance. Only above 1.3020 will the British pound have a chance to retest 1.3155. If it fails to overcome 1.30, then we'll have a look at 1.2850, and below that level 1.27 mark. It doesn't look like we'll have a serious resolution of Brexit in the upcoming days, because the British Parliament is unlikely to make the decisive votes. So looking at this 4-hour chart where we have a negative intersection of moving averages, it's likely the best idea will be to sell the British pound on its attempt to get to 1.30 mark. The US dollar didn't change its position much versus the Japanese yen last week, but still it managed to hold its ground, and it looks like the currency is keen to test higher levels. On the daily chart, we see that the main resistance is located at 110 and 110.30. The moving averages are in the negative order here, and the 50-day moving average is declining sharply, providing resistance. So if the pair fails to overcome these levels, then it will return to the support line around 109.25 mark. Let's have a look at commodity currencies. On the weekly chart of the USD Canadian dollar, we see that a bullish engulfing pattern was formed last week. It happened just above the moving averages, where the 50-week moving average went above the 200-week moving average, and this is a positive sign, a sign that the overall bullish bias is continuing in the long term. So the USD is returning its positions versus the Canadian currency. Canadian currency managed to regain some ground on Friday as Canada released a strong jobs report. However, there is support for the pair around 1.3225, and it limited the decline. There are also moving averages below which support the price. So Canadian currency will likely find resistance and dollar Canadian currency will find support on the pair declines to 1.32, and a break above resistance in the area of 1.3350 is needed to open the way up to 1.3450 level, so that we get a kind of inverted head and shoulders here that will open the way higher. As for Australian dollar, here on the weekly chart, we can see that there was a very big sell-off last week, as the Reserve Bank of Australia indicated that it is quite open to cutting interest rates in the future, and as it highlighted various economic risks. As a result, it looks like any attempts of the Australian currency to recover will meet a significant resistance around 0.7160, 0.72 as the general downtrend continues. Some support remains around 0.7040 ahead of further levels of 0.70, 0.69 and lower levels. New Zealand dollar also suffered from the stronger USD, and also it suffered from the increase in the New Zealand's unemployment rate. For now, there is some support ahead of moving averages, but the pair will likely find resistance on recoveries to 0.68 and 0.6850 levels. On the downside, the target support is at 0.6675. Gold didn't manage to continue its way up to go above 1,320, which is 78.6% Fibonacci retracement from the decline we saw in the year of 2018. Indeed, this is a serious resistance level, and looking at the pattern formed here on the weekly chart, the inside bar here, looks likely the price may return lower and test support at 1,300 in the upcoming days. The daily chart also is quite supportive of this idea, although moving averages here are in the positive order. We see MACD divergence, so a bit of lower levels is quite natural here. Oil remains sideways. There is a big resistance in the area of 63 for Brent. As long as the asset is above 59.40, still we have a chance that this is an inverted head and shoulders pattern, but the asset can spend a lot of days between this range, so now we have no indication of upside momentum for the commodity. And finally, US stock market S&P 500 index was capped by the 50-week moving average last week and formed a small candlestick. Below 2,700, it will be vulnerable for support at 2,636, and a rise above 2,750 is needed to open the way up to the next resistance at 2,800. That was all for today. Thank you for your attention, dear traders. and trade with Light Forex and enjoy the various opportunities of Forex market to make profit.